The state regulatory body SAMR just hit Alibaba and Tencent with some new fines, which is very interesting because I thought the days of fines were behind us, but here's where we are. So that's what I'm going to cover in this video. So guys, smash that like button, subscribe if you're new, and of course, leave a meow in the chat. You're watching More Money. Let's get it. What's up guys, and welcome back to the channel where the goal here is to help at least 1,000 people achieve financial independence much sooner. And this is very crazy because I really thought that after that $2.8 billion fine that Alibaba took, I did not think that there would be any fines related to monopolistic practices that the company could incur because they would have got their act together. But I'm not sort of like knowledgeable in the details. So this might be fines related to stuff that they've done previously in the past that doesn't necessarily relate to their actions taken subsequent to taking that $2.8 billion fine. But let's get into the article. You can see here, this was reported on Reuters where they said that the Chinese regulator fines Alibaba and Tencent for disclosure violations. And so what do they mean by that? Well, China has imposed fines on technology giants Alibaba and Tencent, as well as a range of other firms for failing to comply with anti-monopoly rules on the disclosure of transactions. So the State Administration for Market Regulation, SAMR, released a list of 28 deals that violated the rules, and 5 of them included Alibaba. Tencent looks to be involved in 12 transactions. Now, under their anti-monopoly law, the maximum potential fine in each case stands at approximately 500,000 yuan or $75,000 US. And so it looks like the total potential fine for Alibaba is very immaterial at $350,000. However, note that the CCP is somewhat unpredictable and can levy large fines. So overall, it doesn't look like Alibaba is actually practicing in any sort of like anti-monopolistic practices. This looks like these are fines related to failures of disclosure. And so I don't know if the fault is with Alibaba or the fault is with the CCP and not making sort of their disclosure requirements more apparent. It almost makes sense to me that it might be the latter, but I don't know if I'll ever get access to the real information there. Now, don't forget that this isn't the first time that Alibaba got slapped with an anti-monopolistic fine. You can see that earlier in 2021, this is where Alibaba's share price started to collapse. China actually slapped Alibaba with a $2.8 billion fine in an anti-monopolistic probe. And that was because they felt that Alibaba abused its market dominance by having platforms choose between one of 2 platforms. So if you want to list your product, you got to either list it on Alibaba or list it on competitor sites. And they didn't have the ability to list it on both. And so that seemed a little bit monopolistic or anti-competitive, because if you want to list on Alibaba and get access to that huge ecosystem, you got to forego the other ecosystems that exist. And so that practice has now been stopped, which in my opinion, I believe is the right decision for the economy. But of course it impacts Alibaba, and you can see in their recent quarterly results, at least the last 4 or so, that they have been getting impacted by higher competitive stresses in the marketplace. And this is why I'm actually so hot on Alibaba competing in grocery, because I do believe that Alibaba has a leading market position in the grocery space. And as the consumers continue to grow, and as the economy in China continues to grow, Alibaba will grow right there with it by providing more and more value in the grocery space for consumers. And so overall, how does this impact my valuation for Alibaba? Well, I don't think there is much of an impact. Remember, this is an immaterial fine, and I think it's more related to disclosure. I don't think there's other fines coming that are on the horizon. Effectively, that's what I'm trying to say. Despite the fact that the market might feel differently, and the market actually traded the shares down considerably, I think the market might be overreacting, but the market is sensitive to a CCP fine, so I understand why they're reacting that way. But you can see in my valuation that despite the midterm challenges, there seems to be considerable value here based on the current share price relative to the company's intrinsic value. I think that this could at least be a potential 2-bagger. And so I'm going to hold on to my shares in Alibaba I also have recently doubled down with the cash secured put, which is profitable now. And so, or I guess it's out of the money now. And so that's really good. And so I'm going to maintain my positions, and I'm going to further diversify my portfolio with new money coming into the portfolio and the large cash balance that I have into other opportunities. And what do I mean by that? Well, you can see here that because the market is challenged, I always say with every market challenge, there are opportunities, which is what I'm attempting to uncover and make available to the Patreons. Currently, there are 9 companies trading at a value that's less than 50% of their intrinsic value. The list is growing each week as the market continues to decline. And you can see that there's a couple of names that I've unhighlighted here for you. So you can see Foot Locker and Alphabet. These are both names that I'm looking to add into my portfolio. And I actually covered Foot Locker and Alphabet as opportunities on this channel. Now, the question is, how do you get access to that tracker and all the models that sort of link into that valuation tracker? Well, you can get access to all of that at the lower tier that the Patreons get access to. So you can get access to that at that sort of $5 tier. But if you want to join us for an epic live presentation each month, where I reserve my very best research work for, you can join us at that upper Patreon tier. And you can see on that list that I did unhighlight Foot Locker as a potential opportunity. Now, don't be confused that there could very well be a lot of pressure to Foot Locker's results as a result of them losing that Nike contract and as a result of them getting fewer Nike products into their stores and a consumer-led slowdown. However, I believe that the share price might have been overly penalized as a result of those headwinds. And you can get access to my video where I discussed all of that right here.